We saw really unique opportunities to build an investment bank that caters to this industry, which has a lot higher barriers to entry for traditional investment banks, just because, it is this new asset class, right?
This podcast is for informational and entertainment purposes only and is not investment, legal, or financial advice. Opinions are those of the host and guests and do not reflect any affiliated entities. Investing involves risk, and past performance is not indicative of future results. The host and guests may hold positions in discussed securities. Now, please enjoy the show. Jan Philipp, aka GP, you are the founding partner of Areta. Areta is an investment banking firm supporting leading crypto companies across M&A, capital markets, and on-chain services. Previously, you were at BCG, Barclays, and Blackstone. All right, JP, tell me about your time at Blackstone. I feel like there's a pretty, maybe this is because it's a massive firm, but I feel like there's a pretty strong cohort of folks at Blackstone that went into crypto. So, and you're obviously one of those. So tell me about your time at Blackstone, and did anything there kind of lead you to crypto, or were you always interested in crypto before?
Yeah, first of all, thanks for having me, Andrew. It's great to be here. And it's a good first question because, funny enough, when we were at Blackstone, so when I say we, my co-founder, one of my two co-founders also used to work at Blackstone in their private equity group with me. And we met at Blackstone, but had little to do, at least professionally, with crypto. And so both of us got into crypto more out of personal curiosity. And back in the days, that was around 2020 probably, we thought nobody else at Blackstone was crazy enough to, touch crypto or eventually quit their jobs to get into the industry. But only to find out then probably a few months later, after we left the firm, that there's a really good alumni pool in crypto, specifically in the US. And so we created this group chat basically of, all the Blackstone alumni that work in crypto today, across, venture capital, liquid funds, but also founders. Yeah, so it's a really cool alumni group. I think a lot of large organizations nowadays have that. My other co-founder used to work at McKinsey. I think they have a much bigger group. With regards to whether Blackstone led me to crypto, I think, and probably this whole group of people, working in the industry or working at that particular firm probably always had some level of passion for, business and finance. And I would say that Blackstone is a pretty good school when, you're interested in investing and sort of, financial markets. But obviously also business models, right? Especially in our private equity group, where we were really investing across all different types of sectors and analyzing, tons of business models. I think those are good skills. Also, when you want to work in crypto, obviously it's a very specific industry, right? And sort of somewhat at the intersection of financial markets, finance, tech, fintech, right? But at the same time, it's an industry that is evolving extremely quickly. I think we got very excited about sort of just the fact that there's a new, potentially huge asset class emerging really, right? Which, for a lot of people looked kind of strange from the outside, was really difficult to understand, a bit nerdy and almost shady or certain elements of it, right? And so, really an interesting time. And, obviously for us felt like a great risk-reward profile, sort of leaving our previous world behind. But then to answer your question, yes, I think there's a good group of people that had similar ideas and interests, and works nowadays in the whole ecosystem.
So was it Carl or Bernard that was with you at Blackstone? Which of the
Carl?
Okay, so were you talking to Carl about, hey, should we leave Blackstone? Which is that's a huge decision. Should we leave Blackstone and go launch this, investment bank for crypto? Because even that back then was very unusual. I feel like most people in your position would be like, hey, we should launch a fund. So I guess what was the ideation between you, Carl, and Bernard to decide, hey, we should do an investment bank versus a fund or some other structure?
Yeah, I think few things that were kind of probably odd to outsiders in our decision making back then. One, obviously, sort of leaving crypto. Then also the fact going from private equity buy side to investment banking, essentially, right? Usually it's the other way around. and then obviously, sort of rather than also launching a fund, which would have been the more obvious choice for probably most, private equity professionals at the time. So we've been spending time in crypto, more of personal curiosity for quite some years, and so all of us also independently of each other had a good amount of interest in the industry, and we're keen to start something entrepreneurial in this space. Um, Obviously, there were points in time where we were considering also raising a fund. At that time, when we left, which was late 21, early 22, so really late in the cycle, was like the cycle where obviously a lot of venture funds did very well, and you will remember this very well. And there were also a lot of new venture funds emerging, really, right? I would say it's still a slightly different skill set than private equity. And and obviously it was a very crowded market at the time, right? With so many venture funds popping up. Of course, they were doing well at the time, but historically, this industry and asset class has been very cyclical, right? And so our thesis was really, okay, this is probably the first like pretty sizable institutional sort of form of investing in crypto, right? Venture capital at that time. Now you have obviously a bunch of other vehicles, right, and instruments that cater the institutional world. But our thesis was really, this is going to evolve, and at some point, there's going to be also different types of, later stage funds, maybe private equity type of strategies, hedge fund type of strategies. I mean, nowadays we have a lot of liquid funds, right, with different types of investment strategies and focus areas. But so we really saw an opportunity to build an investment bank that is customized to the industry, because obviously as that industry evolves, there's going to be consolidation, there's going to be M&A activity, like in any other industry, right? We've seen this, in internet era, but, also all different sub-segments, right? I mean, fintech and nowadays AI and like all these different, subsectors that have become huge industries by themselves, and eventually also pretty sizable in terms of investment banking fees. And they were always like customized sort of, or like investment banking boutiques that were specialized in certain verticals in industries. And for crypto, we saw an opportunity even bigger than that, because we don't really see it like long term only as a small subsector of tech or evolution of the internet or so, but it touches potentially in the long run, and we're seeing first like proper use cases emerging now. A lot of different other sort of areas, and obviously it's a whole new asset class by itself. And so we saw really unique opportunities to build an investment bank that caters to this industry, which has a lot higher barriers to entry for traditional investment banks, just because, it is this new asset class, right? At the time, all these protocols were, governed in a decentralized manner. You had DAOs, right? And it was so difficult to comprehend for traditional investment banks. It's so difficult to get into it that, we really saw it as a unique opportunity, and something nobody else was really doing at the time. I mean, obviously there were a few other players, but relative to what we thought this market could grow into over the next decades, we saw it at the time really as the biggest opportunity. And obviously, investment banking is also a great, business model, which you can use sort of as a platform to expand into asset management or other financial services over time. And a lot of big firms have started out with this model, including Blackstone. And so at that time, we saw this really as the perfect opportunity for us, blending obviously a little bit our skill sets also from private equity, investment banking, consulting, and then our passion for the crypto industry.
So what was I'm really curious, because you guys launched it was tail end of 21 or was 22?
Yeah, 22.
22. Okay. So, I mean, rough year, right? Very rough year. And, when I hear investment bank, I primarily think of M&A. I know in crypto, that's like, there's a lot of other activities. So when I don't know if M&A was that active in 22. I imagine it wasn't too crazy. I mean, especially compared to now, but what were the first, when you, Carl and Bernard were ideating on like, hey, we need to make money. Like we need to do deals. We need to make money. What was like the first target sector, target market, or target opportunity that you guys were thinking about Yeah, again, because like brand new investment banking firm, how much M&A flow can you get as a brand new firm, right?
Oh yeah, it was terrible. So there was pretty much no M&A activity 2022. 2023 also very little, apart from some acqui-hires types of situations. Startups that were running out of cash after raising rounds in 2021 peak cycle, but obviously, in such a difficult market environment, a lot of these businesses were essentially running out of cash. It was little venture money to be deployed at that time. So it was a terrible market for M&A, and we obviously, when we started the business, it was already beginning of the bear market, and I mean, you've probably gone through some cycles and you never really know how bad it's going to be, but it's going to be bad, and it takes a few years to recover, right? Um, and so we kind of anticipate it's going to be a rough time and take some time for us to do the first big M&A deal, or find sort of these services lines that we think fit very nicely into the whole umbrella of crypto investment banking, right? So it was also a bit of a product market fit search, because ultimately, if you found like an investment banking boutique in any industry, it's like relatively simple. You do a bit of M&A advisory, maybe capital markets advisory, right? But crypto, obviously, we thought it's going to be a bit more than that, right? Just because you have tokens, right? You have this decentralized governance, so we can offer more than that. And frankly, in 2022, we were trying a bunch of things. So yeah, from really like, trying to somewhat find the first M&A deal, even if it's an acqui-hire, and not sure if we found the first one in 2022 or did the first deal in 2023, but around that time, there were still some kind of fundraising rounds, right? So we would have founders with, really putting together a fundraising round in this rather difficult market environment, tapping a bit into our network and sort of also strategic expertise there. But then also tried other things. We published research reports for blockchain ecosystems. We really spent time on, decentralized governance and, helping ecosystems as delegates, for example, or helping them professionalize governance, because at the time in a lot of ecosystems was still very immature and unprofessional sometimes. So we thought we could bring our more institutional mindset to that part of the industry. There are probably lots of other things that we tried or looked into. I think it was really an interesting phase, but what we always liked about that part of the cycle and having started the business in 2022 was really that, in every bear market, the industry becomes a lot smaller. Everyone is less busy, much more approachable. And ultimately, for a business like ours, it's, all about the network, right? And sort of having a deep understanding of the industry and subsectors. And so we could really spend a lot of time meeting people and building, nurturing relationships, which obviously we're benefiting from now a few years later. I think now, if you would have started this business at the peak bull market, would have been a lot tougher, because you can't get hold of any people. And obviously, you're still not going to get any deals, even if there are deals, because it takes so much time to build a brand and reputation for this type of business, and for people really to trust you for what is, one of the most important decisions for many founders, right? Selling your company after having spent so much time and energy on this for many years or decades.
Yeah, I mean, like hats off to you guys for sticking to it, because you guys left great jobs to go, full bore into the space. And 2022, 2023 were rough years, and so hats off. It's very, very cool you guys stuck with it and built your firm today. But I want to hear about your first as you're going through and trying different. You mentioned product market fit, trying to identify product market fit, especially back then with very limited M&A. What was the initial like moneymaker? What was the initial lucrative project that you guys understood that, okay, this is something that we could focus on to maintain just our lives in terms of paying rent and whatever, say like just our basic salaries? I would assume it maybe be something around like on-chain governance, because I feel like there was some pretty exciting activity back in the day and still today around that. But what was kind of the primary thing keeping the firm afloat back in 22, 23?
Yeah, good question. And I think there were it was a challenging time, but there were a few like small wins, which felt like huge wins and probably much bigger than any M&A deal we are doing today, just because they really kept us afloat. And I think, as you say, there were like so many points of time where we could have just stopped this business and returned back to private equity world or whatever. But I think a few things I remember were, for example, first capital markets transaction we did where we had the team on sort of a fundraise, which turned out super nicely in terms of the round size and setup. After probably half a year of work in our deepest bear market. So that was a great and kind of sudden, almost unexpected outcome, and really helped us and gave us also confidence that this can grow into something bigger. Governance for sure also, because it was a bit more of a recurring revenue stream, and so we have like a bunch of bigger protocols back in the days, like Uniswap and Arbitrum, Near, and like probably a bunch of other projects across the ecosystem with governance. And typically these would pay a monthly retainer, and so that really kept the business going. And compared to like M&A or investment banking transactions where you oftentimes rely really on a success fee, which was extremely difficult to get in a bear market. I think the governance piece really also helped us kind of stay afloat. And then over time we got sort of access to more M&A deals, and even if those were smaller, they oftentimes came then with a monthly retainer. And so at some point we had a good, I think, somewhat recurring monthly revenue base that then allowed us also to hire people and gave us confidence that we're on track. And obviously then over time and with the market evolving, the deal sizes grow, and as such also our business evolved. And but I think really those small wins back in the days, and also I think we had some research reports that we published and took some paid sponsorships, right? So really small things that today we laugh about, but they were just great examples of us trying different things, and some were getting traction and some were generating the first revenues. Frankly, also when you come from an investor role, I think probably for anyone really being a first-time founder, right? There's so many things you have to figure out and so many learnings, right? And I think this was a time that just we took away a lot from. Don't necessarily want to go through it again, but I think it really helped us with the foundation for what the company is today.
That's amazing. Very cool. All right, so Areta. Tell me about the name. What does Areta mean?
I should have the perfect story ready for you now, but as far as I remember, no, it's a Greek word, areta, which basically stands for the perfect outcome after a long process. And this is kind of symbolic for what we do for our clients, usually very long and intense process, an M&A transaction or similar, where then we help them really create a great outcome.
Perfect name. Very, very cool. All right. So today, Areta is focused on kind of three subsectors or three sub segments: M&A, capital markets, on-chain services. Can we talk about M&A first? I want to hear about M&A because I know you guys have been. I've been seeing your guys' name pop up multiple places pretty often. I'd say the past 2 years. I'd say. So tell me about M&A. Like, tell me about that process. Tell me about how you guys source deals, how do you guys find deals, and just kind of take me through A to Z.
Yeah, sure. So M&A has basically been core of the business ever since, although we just talked about it, right? 2022, 23, there was little volume, but we obviously always believed in this being like key driver of the business in the long run, right? And it's great to see that, especially this year, last year, so this cycle, some people call it M&A season, but there's definitely a huge uptick in M&A volumes, obviously also from a relatively low base compared to other industries. But we've seen, a great amount of really cool deals happening this cycle, and some obviously we were involved in, some of our peers, also some traditional investment banking firms now entering the market, which I guess kind of also speaks for this whole industry evolving and sort of M&A or crypto M&A becoming a more legitimate thing. I would say in terms of kind of business development or how we win deals, how we get clients. Back in the days, it was obviously a lot of outbound, right? Leveraging our network. A lot of VCs that refer business to us, but also other friends, market makers, all that types of service providers, investors, or companies we knew basically that knew someone that wanted to sell their business, right? And so back in the days was really about being out there, speak to everyone, getting our brand in front of as many people as possible, although nobody was really keen to sell. I would say this has changed a lot over the last year. Obviously, on the one hand side, it's a whole different market environment. A lot more founders are keen to sell because, they didn't want to sell in the previous bull market. Some of them regretting it today, or their business is becoming more mature, their personal reasons. So they had some inbounds because obviously nowadays there are a lot more acquirers out there, right? But then also us having established a brand in the industry, right? Having worked with a lot of founders, having this track record. So it definitely gives us a lot more pull. And so nowadays, I would say most of our leads are really inbounds. So either referrals, people reaching out to us via our website or socials, or oftentimes really VCs that introduce us to portfolio companies that want to sell. And then in terms of the process, it's a very long and complex process usually, and obviously with bigger deal sizes and more sophisticated buyers, oftentimes now also traditional buyers, not crypto native buyers. This process has become even more complicated. But for every deal we take on, and we operate really a bit like a fund, I would say, almost, right, where we have our internal deal committees, and before we take on a mandate, we really prepare a memo, have a longer discussion with the whole team, and then really once we take on a deal, we staff a deal team, it's typically around 3-4 people, and then go all in on that, right? So preparing the company, data room, materials, digging deep into the business model and the product with founders, and running the whole roadshow process, due diligence, up until definitive agreements, signing and closing. This can take somewhere between 3 to 6 months, maybe even longer, right? And so this is how we support companies through M&A. And obviously, what's interesting in crypto, and also one of the reasons why we were so excited about starting this business in the first place, is that you have those more traditional type of equity M&A deals, right? But then you also have tokens and protocol M&A eventually, which we've always been very excited about, and kind of position our business also to capture this part of the segment with our governance team and on-chain services team, right, where we serve a lot of foundations and protocols. But then obviously also our investment banking M&A team. And we've also seen and been involved in the first token M&A deals. But I think really in the next few years, maybe the next cycle, we're gonna see a lot more bigger token M&A deals, because ultimately this is obviously a huge part of the ecosystem that is maturing, right? And over time, I think this will be a key driver of M&A activity in crypto. One of the problems today is that a lot of people don't really have a playbook for token M&A, right? I think traditional M&A is very straightforward. There have been, thousands of M&A transactions, but a token M&A can be so specific. A lot of founders don't really know where to start. And obviously, oftentimes also with centralized governance and community backlash, etc., it involves a lot more stakeholders. And so, to answer your question, I think that's pretty exciting about crypto, because ultimately the processes are not as standardized in traditional investment banks, right? But we really try to obviously cater to our clients and have a very dedicated deal team supporting them throughout the whole process, and try to get exposure to a lot of different subsegments in crypto. So we've done a lot of deals in the exchanges and trading vertical, but also things like block explorers, stake providers, market makers, data analytics companies. So really broad across the space. And obviously we try to grow also with the industry, and obviously expand into all these new verticals, where ultimately we can leverage our general skill set of crypto M&A as well as our network.
Very cool. Okay, so it sounds like the sourcing is just through your vast network, and that's both outbound, but it's primarily inbound now because you've built out that network over years. In terms of the deal evaluation or like diligence process, I want to double click there a little bit. So you guys get a deal inbound. What is that? Take me through like the IC process where it's like, hey guys, we should probably pursue this. Hey, you write the memo. Okay, we're going to present it. And then is it more of like a debate where people are saying, some people are steel manning and saying, hey, we shouldn't do this for these reasons. Other people are saying we should do this. Like, tell me about that process, because that's like a very non-quantitative process that I'm very intrigued by, because it's like qualitative. It's like you're trying to figure out like how do we decide to do this or not? Because it's a big commitment, as you said, 3 to 6 months. So I want to hear that.
Yeah, exactly. And that's exactly the reason why we have this process that has also obviously evolved over time. In the very early days, we weren't as sophisticated, and we can probably become even more sophisticated. But I think it's really important that we have a standardized framework of assessing deals and discussing them in a lot of detail with the whole group. Really, because ultimately we commit a pretty significant amount of our resources and time to one deal for 3 to 6 months at least, right? This process can take even longer, and especially in an industry that is very cyclical, where in a bull market you only have a few shots, right? You really want to get them right, and you won't get all of them right. And there's so many different factors at play that can ruin a deal, right? And obviously sellers can change their mind, right? The market can turn. You won't, find or agree on deal terms that work for all sides. And so it's really important for us to get the full picture. We before we discuss a deal, we really have a lot of conversations with a potential client, kind of pre-agree already on terms, but also dig into the business, request all types of data, get into the data room, analyze the financials, traction of the company, the vertical, the market, potential buyer universe, right? So we really need to have conviction first that this is a business where we think there is going to be interest from strategic acquirers, either from crypto companies or non-crypto companies who we ideally also know well, and we know kind of their corporate development, M&A priorities. But also it needs to have a certain size, and we obviously run initial valuation analysis, right, to determine what the expected transaction value could be. But then there are also a lot of other like more softer components, right? So we look at the cap table, right? What would be potential returns for investors? Who's on the board? How do the founders think about selling the business now? Are they really keen to sell the business, or do they want to opportunistically explore M&A? So there's really a lot of different factors. And then for us, sometimes the category also plays a big role. For example, there are categories where we've done a lot of deals and we know the buyer universe very well, but at the same time, we could also spend our time creating a precedent in a new category where, we don't have as much of a track record, but we do believe that there is going to be a lot of M&A activity going forward, right? So, a lot of internal and external factors, and some are more quantitative, but also qualitative. And I think it's a very good and important process. And obviously throughout the years and cycles, also these criteria change. And certain categories of businesses we were very bullish on maybe a few years ago are not really top priority for us today, and vice versa. And so it's a good framework, I think, that we have in place today, and it's one of the most important things we need to get right in order to grow this business. And and yeah, participate in bigger deals and in the right verticals.
Yeah, how are you thinking about competition from existing TradFi investment banks? Because obviously crypto's growing very large now, and it's, in my opinion, I think it's going to grow, much, much larger, and you're going to have all the traditional players jumping in. So how do you think about competition?
Yeah, also great question, because when we started the business, there were a few competitors, some crypto native ones, and not really a lot of non-crypto native banks or boutiques that would, spend time on crypto or take it seriously, right? Obviously, that has changed quite a bit this year in particular, where nowadays I think you have like every big investment bank or tech-focused boutique is spending time or sort of getting access to some kind of crypto-related deals from the big bulge bracket banks like Goldman Sachs, JP Morgan, etc., working on a lot of IPOs or larger M&A deals, right? Or are building out really their franchise, right? I think the difficulty for them is oftentimes obviously they have this brand, and they have a very extremely good access to traditional buyers, right? That it's going to be really difficult to compete on the same level for any new firm. But what they do lack usually is really the more crypto native network, but also understanding of how the industry works, right? And it can be quite technical. It can be very specific and confusing with like this digital assets and whatnot, right? And so I think the challenge for a lot of these banks is really getting access to more crypto native deals, right? And we see them mostly really on things like IPOs or kind of business models that are more or closer to like traditional fintech, right? So think of centralized exchanges, right? Maybe stablecoin payments companies, right? Those are all great business models, but more similar really to what they're used to, right? Those are equity business. They don't have a token outstanding usually, right? In terms of governance, they run like normal, or they are normal companies, right? So it doesn't really matter as much kind of in what subsector of crypto they operate if everything else is kind of in line with what they're used to. But when it becomes really difficult for them when they try to get access to like more crypto native deals, right? Think of token M&A, right? And then speaking with someone on a video call with a funny animal profile picture who speaks about decentralized governance, right? And crypto tokens and stuff like that, right? And so I think that's where we see ourselves, plus some of our more crypto native peers, really having a big advantage. But also apart from that, I mean, ultimately it's a lot about relationship building, right? And these more traditional players have not spent too much time building these relationships throughout the bear market, and probably won't do so in the next bear market either. And so, this is really our advantage, being fully dedicated to this industry. And we actually had some peers in the past that, obviously then also expanded into AI or fintech or, other emerging industries. But we always decided to keep our focus on crypto, just to really also nurture these relationships throughout the bear market, and then at some point benefit from it. But yeah, ultimately competition is growing, but market is growing also a lot more. So I think we're quite happy with it. And there's also a huge educational component with it, right? There are a lot of founders in crypto that haven't built a company and haven't sold a company before. And oftentimes they're also very young and they don't know these processes. They don't really know why they should hire an advisor. And so especially in our early days, we spent a lot of time just convincing founders that if you want to sell your business, you can't do it by yourself. It's close to impossible, or at least wouldn't generate you the same outcome in 99% of the cases. And so sometimes we're also happy having more competition and more people educating founders in the market, and also our potential clients about the need for these types of services.
Tell me about the token M&A, and it was really interesting. You think that that's going to increase over the coming years, and like how does it even work? Is token A literally buying out token B, or tell me about that process?
Yeah, I think it's gonna grow. Just because if you look at the number of tokens out there, and obviously you need to exclude a bunch of tokens that are abandoned or that are probably not going to survive in the long run. But overall, the number of protocols is growing significantly. And obviously, the market cap, also excluding Bitcoin and ETH and other majors, should be growing over or has been growing at impressive rates over time. And so ultimately, these are oftentimes organizations that sit on billions of dollars of market cap. Some of them are generating really strong revenues, are extremely capital efficient, and so they're actually great M&A candidates. Now, just because you don't really have this playbook and very little or no M&A advisors have been really spending time on this category, we haven't seen as much activity. But I do strongly think that this will change over time. And how these deals can be done really, really depends on the protocol. And, for example, how it's governed, whether this is, sort of more centralized governance, like a traditional company, or decentralized governance where, you might have to basically get your M&A proposals through the official DAO forum, right, and get all the delegates and token holders on board. So the actual process depends a little bit on how the protocol is governed, for example, and also who controls the token and things like that. But we've seen different types of mechanics here, from a more centralized deal where it's really negotiated between a acquirer and the seller. And the acquirer can be either a more traditional company, can be also a company that wants to launch a token but hasn't launched a token yet. We've seen that recently, where they pay basically in their a percentage allocation of their token supply, which is not yet released, which is interesting, but can obviously also be more mature protocol with a token, right? So different types of acquirer groups. And they might negotiate this deal and sort of approach the seller, so the founder of the protocol, really bilaterally, and only once there is sort of general agreement on the strategy and the synergies and deal terms, it will be brought to the community. We've seen other instances where there's a more hostile approach, and the acquirer just goes straight to the forum and basically publishes a proposal, right, without really pre-discussing it with the team. And then just in terms of the payment and or sort of the transaction mechanics, it can also really, really vary, right, from taking a token private before you do the transaction and then acquiring the entity to redeeming the tokens, right, in exchange for the acquiring tokens. So different types of models we've seen, and really depends on the protocol. But I think, again, also this will evolve over time, and at some point I can imagine that there's going to be a lot more proactive BD from investment banks on forums, although a lot of protocols are moving away from the decentralized governance and DAO model currently. So it will be interesting to see. It obviously also needs to adapt to regulation and how governance is handled. But I think there's definitely potential for really, really big deals, just given how big some of these organizations really are, also in traditional terms. And not many investment banks are aware of it and do have access to those types of organizations.
So is the real edge or alpha within these on-chain governance structures, or do you think that there's significant value to be created even with the traditional company structures that we're seeing?
I think that's something we will have to see where the industry goes really over the next few years. If you had asked me probably a few years ago, I would have thought it's going to go more into the token direction. But this cycle has really shown that all the big M&A deals were more traditional companies, and in fact, where also a lot of investors spend their time are probably less infrastructure tokens and things like that, but things like digital asset treasuries and SPACs and ETFs obviously have driven a lot of the flows, right? And so more back to traditional instruments. But I guess we have to see, right? It really depends also on the business model. I think for obviously certain businesses, it makes just a lot of sense to be set up more as a more traditional company, right? But for, a Perps exchange or so, there are definitely merits of, being a more crypto native protocol, and also in terms of, token and governance and things like that. And so, I guess it ultimately depends a little bit on where the industry goes, also in terms of innovation and use cases. But as of today, most of the M&A activity is really in the more traditional segment. But you do have obviously also a lot more kind of token M&A deals compared to, previous years. So both sectors are growing, and I think how we want to position ourselves is always at the forefront of both of them, and capture the growth of the industry really.
Here's a question. So, if more crypto companies are traditional companies and less like these DAOs and decentralized things, in your opinion, what role do tokens play in the future, like going forward? If you can kind of set up a company, no problem. You don't have to decentralize or whatever. Are tokens necessary in this future, or you think that not really?
Yeah, I mean, some people are already arguing that tokens essentially become much more similar to stocks, right? Oftentimes, especially if there's no such thing as DAOs and decentralized governance, and obviously as there's some different characteristics, such as tokens, usually you don't have any dilution, right? There's a fixed token supply, although not for every protocol, right? Obviously the process of a token launch versus an IPO or so is like completely different, right? And so there's still a lot of differences in terms of the characteristics of both instruments, but I think a lot of people would argue that they have become a lot more similar. And so I think we will have to see also, what the regulators do, right? Obviously it's also a matter of incentives, right? And the traditional capital markets are just a probably different animal in terms of liquidity and kind of capital available, right? And we've seen that now with all the digital asset treasuries and things like that, basically opening access to traditional capital markets versus the more crypto native capital markets that most of these protocols and projects had access to in the previous years. And so I think there are merits of both instruments. I think a lot of different things will determine whether tokens will still exist in the next few years or in the way they exist today. Obviously regulation is really important, and obviously has changed a lot of things already. But yeah, I think it still continues to be one of the most exciting things of this industry, that we do have this new instrument that sometimes works out well, sometimes less well, but is evolving and also has a lot of advantages compared to like stocks or other types of assets.
Yeah, if kind of one of the primary concerns of traditional public markets is that there's just so few IPOs, and it's so difficult to launch a public company, and the recurring cost, at least in the States, is like $3 million at a minimum per year to operate a public company. It's like, if these are the concerns that people have, and the kind of the complaints that I've been hearing, at least on Twitter, are, in theory, tokens could provide like a pathway for companies to quote unquote like IPO earlier. Of course, you run into securities regulations there, like that's like pretty much a security like fully. So we'd have to kind of solve for that. But yeah, it's exciting because I think that tokens are going to evolve significantly over the coming years, as you just mentioned, and you guys are going to be there, and if you could kind of navigating that whole period, which is going to be really, really, really fun. All right, so I want to hear about capital markets. We spent a lot of time on M&A and digging into that. Tell me about your capital markets business.
Yeah, so on capital markets, we basically help teams and projects on sometimes primary fundraisers, ideally later stage, right, where it's very common also in traditional industries and software and tech industries to have some financial advisor, investment bank really structuring the whole round for you, preparing the company, right? And so this is a very much traditional model that we've brought to crypto. But then apart from that, you also obviously have a lot of capital markets activity around tokens, such as secondaries, which is a huge market, and you have a bunch of players out there. Also things like investor relations, so really helping companies do proper reporting and like tailoring sort of the or token story in that sense, right? To investors, and making sure you have structured data, financial model, and things like that ready, right? Which I think is a huge opportunity still ahead of us, and where we as a company also don't spend enough time just yet. But I think, in the next few years, there will be a lot more companies, and there are some great examples this cycle, like EtherFi, for example, is doing a great job with like investor analyst calls and, having more, structured investor updates. Obviously, some companies like Blockworks and so on, they provide research reports, investor quarterly reports that we know from the traditional world from public companies, right? Which, just synthesizes this data and provide the full picture really for all types of stakeholders, token holders, potential token holders, which wasn't really available before. And so I think this whole kind of investor relations market is going to grow in crypto. And with that comes obviously its support on capital markets transactions. So secondaries, right? Pre-TGE, but also post-TGE, locked token sales, as well as primary fundraisers, but also equity secondaries, right? So a lot of these pre-IPO companies nowadays, there's a huge amount of capital markets secondaries activity, right? And so, it's again, basically a more traditional model that we've tailored to crypto industry. And we strongly believe that both equity and token capital markets will just have to become a lot more sophisticated, especially as we have a more sophisticated set of institutional investors, right? So, for a lot of crypto VCs, they know how to use basically crypto native tools and, analyze block explorer and more, crypto native blockchain data, right? But for, traditional asset managers, private equity firms, right, all these tools are new, and they're more used to really structured, professional, institutional reporting and also services, right? So really having, intermediary that presents you an opportunity in a very structured way as a clear process timeline, right? I think as we want to open the industry also for, broader universe of institutional investors, we have to also step up as an industry. And I think for every protocol, especially the bigger ones, it's really important to become more sophisticated, right? And either just setting up a capital markets function themselves, but for especially transactions, also working with an institutional advisor that can help you throughout this transaction and open also broader access.
Do you think the investor relations, I guess, like subset will be solely focused on tokens going forward, like, at least within like the crypto natives? Or do you think that IR will expand dramatically to like the more publicly traded crypto companies and like DATs especially?
Yeah, for public companies, also public crypto companies and DATs, you also just have, equity research reports from, traditional investment banks, right, that have strong equity research franchises. So that already exists. It's not something we're doing today, but could make sense for us at some point also to expand into. And similarly for replicate really this model to the token market. I think the reality is today that the demand for these services and the sophistication of investors, although it's growing, is probably still not there for companies or protocols, especially to spend significant amount of money on this, right? But for obviously public companies and like Coinbase, Bullish, Gemini that recently went public, they have very strong coverage from traditional banks because obviously they also want to tap into these traditional pools of capital that would look at those broker and equity research reports very thoroughly and the financial models they provide, right? And so also the crypto side here is much more sophisticated on the traditional side of things. And I'm sure this is going to change for the more crypto native token side of things as it evolves and again like opens access for more traditional investors.
Do you think that the investor relations world, the number of good quote unquote tokens is pretty small, and I think going forward, like I think it'll always remain like relatively. Yeah, I mean, it'll definitely remain small compared to the total token universe, which is that's kind of like very easy to say, but how do you feel about the opportunity in investor relations within crypto? Is that going to be, do you think it's a massive opportunity, or do you think that's a kind of a shrinking, maybe not shrinking, but like a very steady linear opportunity?
Yeah, I think it also depends a little bit on your conviction of, token market, right? Where, a lot of institutional investors are also saying that, this token model will change, right? And, a lot more of these protocols will rather try to get access to traditional equity models, right? And capital markets. But if you do think that, the number of, more mature protocols is going to grow, and I think, even though it's a relatively small number, I would argue that, at least if you look at today's market cap and also numbers, like more fundamental data like revenue, etc., there's probably a relatively decent universe of companies that should use investor relations services or should set it up themselves, right? And don't get me wrong, for us, it's not a big focus right now. I think it's something that will grow, right? I think the opportunity for us was also our internal conclusion is still a little bit too small to like go all in on this, right? But I think this is where the industry should go. And also now you have like, some companies really publishing frameworks for like token valuation, right? And like clear metrics, like it's all been like very intransparent, and it was a lack of frameworks and standards, right? And I think all these things will come over time, and with that also it makes more sense to tap into more professional capital markets, investor relations functions. But yeah, time will tell really where this industry goes. And also a bit to my surprise, this cycle has been a lot more focused, obviously, on IPOs and traditional capital markets, and so that has sort of the token crypto native capital markets investor relations activity has probably not been as much in the spotlight as I would have assumed a few years ago.
All right, tell me about your third bucket, which is the on-chain services.
Yeah, so on-chain services was really one of the things that came out of this whole kind of ideation phase that we talked through in the beginning, right? Where we saw sort of the investment banking, M&A capital markets services as, more traditional, and especially in the early days, more our client group and audience were like the more traditional equity companies in crypto. So, centralized exchanges, right? And stablecoin companies. But at least back then, it was less relevant for tokens and, those L1, L2s and ecosystems, right? And so we wanted to find basically business line that is complementary to what we do in terms of, strategic and financial oriented, but caters to the blockchain ecosystems, right? The foundations, the protocols. And so we started off really with governance services, which we thought was a very interesting model just because, it's so different than centralized governance, and it's an interesting experiment. And obviously, especially at the time, basically every protocol was like, trying different things and optimizing decentralized governance, but nobody really knew how it would work and what it would ultimately look like. And so governance was really the first thing we did. And from there really evolved this over time from like, becoming delegates and ecosystems, right? To then also building certain things. So last year or earlier this year, we started building an audit marketplace with Uniswap, where basically auditing is a huge services market in crypto, but it's very intransparent. You have a lot of different providers, and every protocol basically has a need for audits. And so we were working a lot with Uniswap at the time, and really had the idea of building this audit marketplace with them, where basically every project that needs an audit just comes to our marketplace, submits a request, and then we have a basically list of whitelisted audit service providers, blockchain service security service providers that submit proposals, and you can ultimately choose and get the best offer with average cost savings of like 30% or so, right? And so this was a bit more of a strategic experiment together with Uniswap, which worked out quite well, and we've then brought it to a bunch of other ecosystems, including Solana, Avalanche, Binance Chain, and so forth. And so we're really still doing a lot of like more strategic, opportunistic work there that caters to foundations and protocols, and it gives us really great access and understanding of how these organizations, which ultimately are also huge pools of capital and like extremely important to be close to in the crypto ecosystem, right? How they work, how they think, how they evolve, right? And obviously, while we're doing a lot more, non-investment banking like work for them, right? It has really helped us like build these relationships over time. Also tap into our network there for certain M&A deals where it makes sense, for example, right? But especially also on the capital markets side, right? We can cross-sell our services and leverage our understanding and insights into the more crypto native side of things. And so, yeah, I think it's a very interesting part of our business that has also evolved a lot. We also started running nodes for different types of ecosystems, so supporting them kind of with blockchain infrastructure. And so really see ourselves there as a strategic partner for more crypto native organizations and really being very close to the epicenter and to the heart of, what we call like, crypto native organizations.
Very cool. Very cool. Is there a fourth bucket eventually that you guys are looking to launch? Or I mean, you guys have your hands full now, but is there another thing that you would love to do in the future?
Yeah, there's probably tons of ideas we would have, but I think our clear focus right now is just keeping these three things. I think investment banking, M&A, capital markets is very clear and very synergistic, right? And the on-chain services side is also very complementary, gives us very great access, right? But ultimately is a little bit of a different business model, right? And so for, I think, the size of our company, we don't want to expand any further. Obviously, we've benefited a lot also this cycle from the increasing volumes on the investment banking and M&A side and growing activity there. And so I think our focus should just be staying focused on what we're best at and what we've been doing over the years. But of course, if you ask me in 10 years, 20 years from now, right, when obviously or hopefully the organization will be a lot bigger, there are some service lines that it are very complementary to ours, right, and that it will make sense to expand into. And so we're always trying to stay entrepreneurial and obviously monitoring what's out there, but at the same time trying really to remain focused. And ultimately, it's a matter of time, but then also resources and having the right talent to expand into something, right? Maybe the bear market taking advantage of some opportunities, maybe acquiring a business ourselves, right? If you really have strong conviction. For now, I think we found a nice business and are happy how things have progressed. And I think to grow faster and further, as long as the markets remains healthy, we should just remain focused.
Very cool. What's your firewall situation at your firm in terms of making direct investments? Because I'm sure you guys have really incredible deal flow, and I don't know if there is a firewall where you cannot make those investments through the firm, or if you can do them personally, or what's that situation?
Yeah, we've been actually, I think, for the size of our company, very strict about it from the very beginning, because we always knew that things like integrity and compliance and professionalism are key ingredient really for the success of our company. And so we have a non-trading policy basically for all types of assets where we have exposure to and protocols where we might have proprietary information. We're very selective and careful with like angel investments and things like that. We've done angel investments over the years and LP investments, but we're just trying to be extremely careful to not avoid any conflict of interest, right? And don't sometimes you get the question whether we want or can get paid also in equity, for example, which can also create conflict of interest for us. And so we're trying to be quite careful because I think it's important for the long term if you want to build a reputation and have a 10 or sort of a decade's time horizon rather than a few years or one cycle time horizon in crypto, right? But yeah, as you rightly say, I mean, ultimately we get access to a lot of deals, and it's a very exciting industry. And I think it's sometimes also difficult to remind everyone to stay focused and to not be distracted by some bull market investment opportunities and things like that, right? But I think we've managed pretty well, and really see this as a top priority for us internally as per the company.
Very cool. All right. So tell me about hiring, because you have a team that's you're in, I believe you're in Lisbon. You have folks in Europe, you have folks in Asia. I don't know if you have any folks in the US, but you've got a large team. So tell me about like how you initially built out your team, and going forward, how do you view where you need to expand to?
I think first of all, we're fully remote, fully decentralized, like a lot of companies in this industry. But I'm not sure if there's any other investment bank that is as decentralized and remote as us. I think the team is really now spread across the world, mostly Europe, because that's where the three founders of us are from and living. But across different hubs from London, Switzerland, Lisbon, Germany, to Italy, and now also the Middle East, Singapore, which is an important team for us. So we made the strategic decision relatively early on to prioritize kind of Singapore or Asia really as a key geography for us, because it's obviously a very relevant geography in crypto, but usually also traditional markets a bit underrepresented in terms of investment banking services compared to the US, for example, which tends to be very competitive. But ultimately, for us, what is really important is just time zones, right? Because we work on deals across the world, and in traditional investment banking in particular, you are usually very focused on your jurisdiction, right? Or sort of you're based in London, and you typically do deals in the European region, right? For us, I think we've done deals across Australia, the US, South America, the Middle East, Europe. So basically all parts of the world, right? And then obviously you commit a lot of resources and have to work around the clock for those clients, and therefore it's really important for us to have a presence across the world and cover all the different time zones. And obviously for every deal also we try to put together a deal team that basically aligns very well with our clients' location and potential buyers and so on. So these things are important, but much more important than time zone and location for us, obviously having the right talent and the right backgrounds. And I think we found a very good sort of type of profile for business like ours, where a lot of our team members come from traditional investment banking, private equity, venture capital, and things like that, but then have also early on in their careers developed a strong interest in crypto, either personally or quit their traditional banking job or so to work for a crypto startup, right? And then later on join us. And so that's really important that these people have been trained by these big banks or funds, right? And sort of have the right skill set and to have the right sort of integrity, professionalism. But at the same time, they really need to bring some level of passion and interest for this industry, just because it's so different than anything else. And obviously working in this remote environment can be challenging at times, although it also has a lot of benefits for ourselves. But yes, so I think really a great blend in terms of team backgrounds from traditional finance, but also crypto and across the world, and obviously continuously expanding the team. The good thing is about this business model that you don't need to have a huge team. It's also relatively capital efficient. You just want to get access to more transaction volume and more sizable deals, right? But we're continuously looking to grow the presence. We don't have anyone in the US just yet, although we've done a bunch of deals there. And so we're keen to grow the platform further.
It's amazing. Very cool. All right, JP, where is Areta in 10 years from now?
Great question. I think in 10 years from now, if you ask me, I would see ourselves really as a more sophisticated financial services investment banking firm that, has a very strong platform, sector coverage teams with deep sector expertise for each of the crypto categories, which, by the time, I guess, we'll have a lot more use cases and a lot more different subsectors. And obviously a strong track record, right? From, small mid-cap deals to large-cap transactions across different sectors, token, equity M&A, maybe IPOs, across all different geographies. And probably expanded that also from, M&A and capital market services to some adjacent business lines. I guess time will tell what these are. I'm not sure if we will have, expanded into asset management or things like that by that time, but I think, we obviously have a few things in mind that could become interesting. And I think, wherever we see the biggest opportunities and most synergistic areas, we will want to double down on. And I'm hopeful that we can grow the platform a lot more by then, assuming that, the crypto market will kind of do well as well, and we won't have too many negative surprises as in previous cycles.
Awesome. Is there a sector that you are extremely excited about, like a subsector within crypto, like maybe stables or something like that, or I don't know, DATs or something like that? Or from your perspective or your opinion, what do you think is the most exciting thing happening within crypto? Like which subsector?
Yeah, I guess the most obvious answer probably for many people would be stablecoins right now, just because, it feels like the first use case where we have a ton of appetite and interest from traditional payments firms, banks, fintechs, right? And, it's hard to argue against this use case and product market fit of the industry there. So, this is obviously an interesting thing. I would say DATs are very interesting just because for a firm like ours, where, you come from more traditional capital markets and, SPACs and, the DATs are not necessarily something we have in the same shape or form in traditional capital markets, but, we obviously understand it very well. It's an interesting phenomenon. I can also imagine there's going to be a lot more M&A activity and consolidation of DATs in the next years, and hopefully something where we can position ourselves. But apart from that, there's obviously a ton of different things. I'm still very excited about DeFi, and this is basically what brought me into crypto back in the days. And although it's been probably a little bit less of a focus area for a lot of investors, not the hottest narrative per se, there have been some great protocols this cycle, right, from Hyperliquid to Ethena and so on. But also some like Aave, who we've been working on for a long time as a delegate, that really have proven to be very, very good business models throughout the cycles. And so I think DeFi and the evolution of it is very exciting. And then new primitives, prediction markets. I think today was the announcement of the Poly Market round, right, with the NYSE owner investing $2 billion into Poly Market. That's been something I think I used Poly Market first time in 2020 and loved it. And just seeing something growing from, very early stages to what is now valued at $9 billion and can potentially disrupt, a lot of the traditional, prediction markets, sports betting and gambling, but much more than that, right? So I think very cool examples and just so many different, use cases and primitives that people are building on, right? Obviously, AI and all blockchain infrastructure have been also pretty strong, and they're like great, projects coming out of these categories as well. But I think the great thing is, if you ask me in a year, probably would have completely changed again in crypto, just because there's so much happening all the time, and the industry keeps surprising us. And I think that's also what keeps us going and why we are all pretty excited about this ecosystem.
Amazing. All right, JP, it is time for the closing questions.
Let's go.
All right. What is the best advice you've ever received?
Probably an answer that a lot of people would give you, but working hard and staying curious is like probably the two most important ingredients, and persistence, especially with building a company. I think every one would tell you this in a book or podcast and whatnot, but ultimately it's really not more than that, I guess. And I think also we've seen this a lot from our clients, and in crypto where things are changing so drastically in such a short period of time, and you can go through really difficult times and cycles. And those that work hard, believe hard, and stay curious, especially in an industry that changes so much, and obviously show persistence, have been doing really well, right? And it's probably also true for other industries, and a playbook probably that a lot of people even in traditional finance would agree with. But I think those kind of more basic ingredients and advice have proven also for me to be quite powerful, and just core ingredients of whatever I do.
Yeah, what's been your driving motivator? Because we mentioned that you were in 2022, 2023, like slogging out in the bear markets, and you just mentioned what's the best advice? Working hard, staying curious. What's been your driving force behind your motivation to keep going?
I think for me, since I started my career at Blackstone, I always had this dream of like doing something entrepreneurial at some point in my life, and I've been thinking about different types of industries and business models basically ever since, and even during university days. I think ultimately for me, freedom is just like an extremely important value, and sort of something I thrive for, right? And this includes freedom over all facets of my life, financial, but also time, and where I want to be, what I want to do, right? And I think that has always been an extremely important driver for myself, right? And then really entrepreneurship is obviously a great tool to potentially achieve this, right? And build your own company, sort of have a big vision for something, and really going all in on this. And so I think this has always really motivated me. And then crypto, I think there was this interesting additional driver and like motivation of like, there's this weird thing, this new industry that nobody really gets, nobody takes serious, and like going all in on this, and like taking probably some quite significant career risk in my life, but going all in on this and seeing how this will ultimately hopefully prove some people wrong, but I mean more importantly just turn out to be a good bet. I think this has always been a great driver, or an important driver for me since I started this career, and something that time will tell. But I think just the industry being so different, and offering so much, while it can sometimes also be very exhausting, as I'm sure you agree, has been still a quite cool and rewarding experience.
Do you feel that being an entrepreneur has changed you as a person, or it kind of sounds like you always had the entrepreneurial bone in your body, but since starting your entrepreneurial journey, how have you morphed as a person?
Quite a bit, frankly. I think it's just like, although it can be very rewarding and cool, and obviously you have a lot of control over your life and freedom potentially at some point, right? But it can also be extremely stressful, and it just becomes like the number one, and you will know this as well, right? But the number one thing in your life. And to me, probably personally, my professional career has always been relatively important since university days, right? And my previous job obviously required some long hours, but it was never like the same level of dedication, right? And never as important, or like as much at the center of my thoughts and life as my entrepreneurial life has been. And so I think this has been kind of very challenging, especially in the beginning, and you need to get used to a lot of things. You need to learn a lot of new skills, right? There's a lot of challenges you have to deal with, right? Personally and professionally, building a company and building this resilience has definitely changed me, and something I had to learn really and grow into. but then obviously comes also with a lot of, new skills, and that ultimately also probably impact a bit your personality, right? From, being working in the traditional financial industry, right? Where sort of you're more of an execution machine and, analyzing numbers and putting together models and things like that, to like having to become someone at also relatively young age when we started the company, that, has to do sales and hire people and build a company and like deal with all these things. I think just adds also some like, different types of personality traits to you, both probably in a positive and negative way. But I feel like overall you just grow a lot in terms of personal development in a few years compared to, being in a traditional employee role. And so I think this has been pretty cool, experience to go through. Although sometimes obviously it comes at cost and with some very challenging days at times.
Love it. All right, last one. Is there a book, blog, podcast, movie, whatever, some piece of content that really inspired you to do everything you're doing now?
In terms of books, I've always been reading like, these entrepreneurship books back in the days, right? Be it about, Elon Musk biography or Steve Jobs, or even the Blackstone founder, Steve Schwarzman, published his biography, which is a great book, by the way, while I was still working there. So certainly that is also, obviously great storytellers and, very impressive personalities. And so I found that always quite fascinating, although nowadays I barely read those books, but it probably has contributed a little bit to, what I ultimately thought was an interesting and cool career path. And yeah, I think nowadays I try to spend as little time on like, reading such books or social media and things like that, and trying to get as much free time and, time away from all these social apps and emails. But it's probably done something to the younger self of me.
Amazing. JP, thank you so much for coming on. It's been incredible. Where can people learn more and connect with you?
Email, Twitter, LinkedIn. I'm usually quite available, and always keen to chat with people. And thank you so much for having me, Andrew. It was really fun chatting with you. And as I said before, I've been not listening to a lot of podcasts, but yours has consistently popped up on my LinkedIn and Twitter, and always with some very interesting guests. And so keep up the great work, and I will continue to listen to new episodes as well.
Amazing. Thank you, sir.
Thank you, Andrew. Have a good one.